Hello and welcome to Buy Africa, the show where we focus on investment opportunities around the continent. I'm Tshepho, Modiba. Thanks for joining me. Tonight I'm joined by the dapper Thabo Ncalo, Managing Partner at Savvy Capital Partners. Thabo, thank you for joining us as always.
Thanks, Tshepho, always.
Interesting subject. I feel like every time you come on the show, you're schooling us.
Just sharing, I guess, yeah.
Let's continue that trend. What are we talking about today?
So, look, I think today we're going a little bit deeper in that alternative investment space,
Right.
And essentially this is targeting, call it that 5 to 10% allocation to an investor's overall allocation. But this time we're talking about the corporate side of investing.
Right.
So what we've seen essentially has been this rise in Africa of corporate venture capital or corporate venture investing, where corporates themselves, and particularly in the fintech and the tech space, and the telecom space, right. Taking direct stakes and going along the vertical chain and investing directly in emerging companies and emerging ventures across Africa.
Is that really designed for the corporates to protect their market share? Are they looking at taking stakes at smaller businesses that are making sure that hey, one day this company doesn't become bigger than me?
So it's a little bit of that as well. It's protection as well, protecting their own space. And I guess there is also that developmental aspect to it as well, of particularly around some of the things we've seen. I mean, this week we saw Barclays, for instance, in Kenya, coming up with an enterprise and supply development program, launching out to roll out across Kenya.
Right.
In South Africa, it's been happening quite a lot. So it's dual. I think the guys do realize that they have to protect their space. In the financial services space, we've seen a lot of disruption coming from particularly payments, small ventures looking at the payment solutions. All such things, invoicing and so forth. So a lot of financial services companies realize that we have to put some of our capital in investing in some of these ventures because they are innovating and they're in our space. So we have to either play a part in it or get moved over. See quite a large chunk of our business getting eroded.
You touched a little bit on financial services. I'm assuming that's particularly relevant given, as you said, the innovation and the technology. I mean, banks are now becoming almost tech businesses.
That's it. And that's why it's also spilled over to the telecom space, So you've seen MTN doing it in South Africa. So even in the African listed space, Safaricom, as an example, has got a venture fund running in Kenya where they're investing and investing across, very small ventures and emerging businesses in Kenya that are in their space, in the tech space particularly. So it's across, but I think, just like in many spheres, you see the financial services and the telco space moving a lot faster than your traditional businesses because they're more tech influenced, I guess.
Right. So, okay, I think I understand the framework of the opportunity set. Is it really limited to those two sectors, or are we seeing it across the board?
Actually, if you look back, I mean, so if you look back a little bit, for instance, at Nestle in Nigeria, right. Nestle has been funding a lot of its downstream suppliers.
Yes.
And they've traditionally been doing it through, for instance, working capital. So giving them debtors days for 90 days and so forth. And a lot of these suppliers rely on these multinationals and large corporates. So what we are actually seeing now has been a more direct interest in big corporates actually investing and taking equity in a lot of these businesses. So and it's starting to spread a little bit outside the two sectors we spoke about.
Sure.
And I would imagine the consumer space is one that's pretty ripe for such innovation. Sure. There's sort of the agri space as well, where there's a lot of movement around that space. There's a lot of room for companies to play in that space as well.
Okay. In terms of then, Thabo was sitting there assessing, understanding this background. How do you take advantage of that? How does this present an immediate investment opportunity?
So for us, I mean, obviously we run a venture capital fund in South Africa, a traditional 12J, what they call a SARS 12J vehicle in South Africa, where whether corporates or individuals, if they invest in the fund, they get a tax benefit from investing in the fund. So we've seen actually a large chunk of the investment interest coming from corporates who are looking to place money in a fund where they can get diversification, but in their own sector or in their own chosen industry. And corporates are starting to think a little bit, beyond just, either just buying companies directly, but investing alongside managers, private equity managers or venture capital managers. So there's one space, that's the one space where, for instance, as an investor, as a pension fund, or even as an individual, you could invest alongside these large corporates in the innovation they're tapping into. And that's happening mainly from some of the VC funds that are open and open to the public to invest in. I mean, our fund, for instance, attracts individuals and companies. So that's one window where these companies and these individuals can participate and also gain some window into some of the innovation that's happening and bubbling under in Africa that a lot of people don't traditionally get to see and invest in.
So does this then present, I guess, a unique opportunity to tap into the type of businesses that actually wouldn't become available to you otherwise?
And also, I think it helps in that solving of local problems.
Right.
One thing we've seen around innovation is that it helps to solve specific problems that large corporates aren't necessarily able to solve. You know,
Gotcha.
I'll give you an example in terms of distribution. If you go to a lot of the what you call slums across either Makoko or Deep Sloot or in South Africa or anywhere else, I guess you go in Nairobi or elsewhere in the continent, there's a huge problem with distributing products by large corporates. You know, in terms of just getting products to the men in the middle of a slum, as an example. So we've seen a lot of innovation around distribution as an innovation platform where these smaller enterprises and medium-sized ventures are able to get directly to the consumer, and that's offering a lot of good space for the multinationals and some of the larger corporates to co-invest with some of these smaller ventures in reaching a deeper and increasing their market shares. Okay. So there's a lot of that innovation that's not happening, and I think every time you speak about innovation, people only think about tech. Right. And there's innovation in distribution in Africa, which is important, you know, where it's new distribution channels that are reaching new customers and opening up new channels for larger corporates and larger multinationals.
Okay. I guess outside of South Africa then, where are the opportunity sets for this particular type of investment coming up? I'm assuming East Africa is ripe, sure, given the tech space there, but including East Africa, where are you really looking for?
I think I really believe sort of Africa's problems are really going to be solved at that local level. And these smaller medium-sized enterprises represent the largest number of enterprises operating on the continent. Okay. And so to answer your question, it's across the continent.
Gotcha.
But you've got to look at hubs, obviously. And as I mentioned, South Africa is a very strong hub. Nairobi and Kenya as a whole are a very strong hub. And of course, you look at Ghana and Nigeria as very strong hubs. So out of those markets as well, you've seen the same coming from, for instance, Orange out of West Africa, which is a telco, also playing around the innovation space, you know, right, and playing around similar levels. Microsoft is doing it across the continent, you know, where they've got representation as an example. And I think it's happening across. It's just that, you know, when you start galvanizing the action through the hubs, it makes it easier to spread across some of the smaller markets across. But it certainly is happening throughout, you know, outside the major hubs as well.
At an individual company level or an opportunity level, what makes a transaction appealing? Is it a management team? Are you looking at taking stakes that are majority? What are the decision making at that micro level?
So I think if you're a corporate looking to get into the space, one of the things you have to think about is do I have enough time and resources to deploy a team of my own to go and innovate, you know? And one of the things the teams look for, as you correctly say, is a strong team that they want to back. A strong team that's founded a model, a business model or a product that fits quite well into the business or helps the corporates, clients and suppliers, as an example. So it's all about tapping into all these great business and ideas that actually add to their business processes. And if you think about it, for a lot of the businesses, the large corporates, to go and spend a lot on R&D or on hiring people is quite expensive versus just deploying money in a venture fund that does this for them, but they also benefit from getting the diversification of investing across different markets and across different companies.
Sure. How far along the life stage of the business are we talking about? Are we talking about fairly new businesses at idea stage, sure, or are we talking really some sort of demonstrable earning potential?
So, I mean, we certainly focus on post-revenue businesses, right, where you've gone beyond idea. You know, you are now sort of early stage, but not a startup. So you're beyond seed stage, but you are an operating. So essentially, it's that middle market that focuses between the space between when a company leaves the startup phase, goes to a Series A type fundraising, and that space when it gets to be looked at by private equity players or even looking at an IPO. So that entire space is very ripe in Africa, and it's a space that has traditionally been ignored, because a lot of money either flows into just a listed space or into fixed income securities across the continent. So as a part, as I mentioned initially, as a part of that whole 5 to 10% of allocation, it's very smart money at the moment that's running into that emerging space and emerging middle market space in Africa.
Now, when you're running a listed equity fund, you go on one of the data providers and you pull a list of listed businesses that you can assess. How do you find opportunities in this space? How do you discern between one great opportunity relative to another?
I think that's why we've seen a lot of where the corporates and individuals want to partner up with a venture capital fund like ours or people in the venture space, because it's very difficult to find these businesses. You've got to be in the ecosystem, and it helps, for instance, where you've seen. If you look at even data in the US, I mean, there's a very interesting Harvard Business School study that shows that corporate venture-backed funds have actually outperformed your traditional venture capital funds by a region of 5 to 6%.
Interesting. What drives that?
Well, because the corporates are able to add more to their companies.
Gotcha.
So they're able to assist them in terms of management assistance, and for instance, they're able to buy their products as a start. So a lot of these smaller ventures are able to even get their first customer from their first investor, being the corporate. So they tend to outperform a little bit, and also because they tap into the corporates' networks, they tap into the corporates' systems and processes and so forth. They're able to improve their process in their own business a lot better. But of course, to go back to your question, you need the venture capitalists to go find the businesses and the corporates to come on board and actually partner up in the development of the companies and ultimately the continent.
And in terms of, I guess, the investment horizon then, what are you looking at? Like a long-term partnership? Sure. Is there some sort of exit strategy? So
this is a 5-year plus story. Call it, I mean, typically most would be looking at a 5 to 7 year story. And what's been great about this is in this space, a lot of the exits are typically taken up by the corporates themselves, where they would either solo the business up into the bigger corporate, make it a division and so forth. So the corporate buyouts themselves, or even management buyouts, have been sort of more the leading part of the exits. Yeah.
All right, perfect. Let's leave it there. Thanks to my guest, Thabo Ncalo, Managing Partner at Savvy Capital Partners. That's all from Buy Africa this week. Remember to follow me on Twitter. That's at Modiba_Tshepho. And send us your thoughts about the show using the hashtag BuyAfrica. For myself and the team, goodbye.